million in funding for the purposes of making loans to rehabilitate and extend the long-term affordability of at-risk projects in the department's portfolio. For the purposes of this program, at-risk is being defined as projects with an affordability restriction that has expired or will expire within the next 5 years. As I mentioned before, our two main presenters today are Senior Housing Specialist George Rodin and Carter Bennett. Carter's going to kick the presentation off with an overview of the department's new application portal through which all PRP applications and supporting documentation must be submitted. Then George, who is our application developer, will do a deep dive into the application form and its functionality. We're really excited to announce that our application portal will go live tomorrow and will remain open up until July 29th or until funds are exhausted. As a reminder, this is an over-the-counter program, so applications will be reviewed and awards made on a first-come, first-served basis. So timing with your application is very important. And without further ado, I will turn the presentation over to Carter.
Thanks, Lindy. Hello, everybody. My name is Carter Bennett. I'm a specialist with AMC, and I'm going to give you a brief walkthrough of the portal. And to kick it off, I'm actually going to start one step back and just show you the website really quickly. So the portal is going to launch tomorrow at 8 a.m. When that happens, a button will appear here that you can click on. Alternatively, you can click the Apply Now button. And that will also launch the portal environment, which I'll show you in a second. Previously, we hosted the application in this section, and we've moved that kind of to resources. And so you can find both application materials and other kind of supplemental documents like resolutions and program references. Excuse me, my cat is in the way. And just one thing to note, George will talk a little bit more about this, but HUD released the 2022 income limits. So we've updated the reference tables and made a few presentational tweaks just to have data be easier for users. And that file is here. And George will talk a little bit more about that. Additionally, there's a couple other forms that typically will need to go along with your application, along with kind of sample resolutions. And then also, if you haven't seen it, and I'm assuming you probably either have or know your project is eligible, we've created a regulatory agreement expiration report that it does not list the sponsor's name, the developer's name. It just has the project, the address, city, county, total units, and the regulatory agreement expiration. There's been a few projects that we know of that were left off, so this is not a final decisive document, but it's meant to be a job aid, as a place to start, if you will, when looking for different things. So with that, when the button comes up for the portal, again, you can click either Apply Now or a button that will be at the called the lead banner at the top here, and that will launch you into something that looks like this. And now this is HCD's new application portal that we're going to use. The plan is to use it across, I think, a wide array of funding programs going forward. I've already logged in, so I'm going to take you over to the next screen, just because there's a lot of data entry and I don't want to bore you too much. So once you register, it will take you to this page here. And when you land here, instead of saying cancel application or save, it will say save. It'll say save and cancel application until you fill in all of the required fields, which are denoted by a little asterisk. And once you do that, we'll go back. Once you do that, there'll be a excuse me, this is embarrassing. Once you do that, you'll have the ability to hit save, continue to the next screen. But I'll walk through the fields really quickly. So this captures just sort of high-level data, who's applying where. This helps both with a number of kind of reporting data drills, tracking, and kind of quality assurance on our side. So we can kind of track who's submitted, where they're at. So it's basic contact information, project information. If you were to say, hey, yes, there's a second applicant sponsor, additional fields would pop up. Um, so there's a kind of a few toggles like that, but it's fairly straightforward. And down here, all we're asking for is something like a set aside. Are you applying for a small project set aside, residential hotel, or you're just applying generally in the main pool? Then we're asking you to enter in the original HCD contract number. This will help us just relate your project name and the sponsor kind of back to our project files. As you may know, many projects often have an application name, sort of a formal name. They usually have between 2 and 5 names, depending on how it was formed in the era. So yeah, then there's a drop down here, which I think I've deleted by saving it. But you'll be able to pick a number of programs. It'll have the acronym, like you would say MHP, multifamily housing program, for example. And you could select that. We asked for the affordability restriction date. There's a little, kind of sort of job aid here that you can use, but alternatively, you can also type it in. If you were to pick something like this, you could see the format and say, hey, no, this was actually, it actually expired in like 2019, in May on the, on a date. So there's a number of ways to kind of skin that cat, but we'd love to have your actual expiration date. You know, you know, 21. And it'll prompt you if you enter it wrong. So yeah, if you ever see an asterisk, that is just telling you, hey, this is required. You can save by hitting Control S or one of the many save buttons around here. And initially, when you come here again, this cancel application will morph once you've filled in all the required fields into save and continue, and that will open up the attachment screen. So this attachment screen, has a number of rows, buckets for different things. A lot of it just has to do with the different entities in the control structure. So the number of kind of shell companies, single asset entities, SPEs, what have you, between the borrower, owner, and the sponsor. So you'd upload those here. Again, anything that's marked with a asterisk is mandatory. We've dropped in a number of kind of references. It will tell you, on what tab you could find more information and provide a little, brief excerpt of what this is and, how it works. So it's imperfect. It's a work in progress. This is a new portal. There will be more features and streamlining to come in later iterations, not for our program, but just in the department's development of this tool. And so I'll just show you how to drop one in really quickly. So you can just drag a file and drop it in anywhere. If you don't want the file, you can delete that file and say, hey, I don't want that attachment in here. If you dragged it in and said, oh my gosh, I don't want this to say sample file, you can rename the file in the system to, like, app one, certain legal, or whatever you so choose. And once you have uploaded all of these, if you see here right now, I have save and cancel. Once you have uploaded a file to each required area, you'll see that a new option exists to submit the application. This search field may be somewhat useful. So this searches the different boxes for upload. So if you wanted just to see, hey, did I get all those resolutions? What are those names? You could type in start typing in resolution. It'll pull all the possible resolution boxes up. Or if you said, hey, did I get all of my applicant one, documents uploaded? You could type in app one, for example, and it'll just pull up all the boxes that relate to applicant number one. And that kind of that structure, naming convention, applicant 1, 2, party 1, 2, 3, is laid out in the application. So that's that. When you hit submit, we get a notification that there's a submission on our end, and we have a team kind of standing by to capture that and confirm. You'll receive a confirmation email to the email address that you used to register your account to, saying, hey, you've submitted. This is the date and time that you submitted at. This is the project address, that sort of information. So just a document to record that you in fact did submit, and also provide a link back to this portal so you can come back and say, hey, gosh, we've been doing this and that. What version of something did we do? You can come back here, revisit it, and look at it. I think with that, I will turn it over to George Rodin to take you through the application itself, unless anyone has any questions about this portal environment now. All right, George.
Okay, hello everybody. Hope you're having a great day, and appreciate your longtime interest in affordable housing and HCD. My name's George Rodin, and we're going to go over the application this morning. I think you were sent a mock-up of what you see. Let's see, I don't know if you're seeing it on the screen yet. Okay. A mock-up of the application. As Carter indicated, we updated the previous application. So this one's dated 4/27/2022.
You're on mute, George.
So we're going to go over the mock-up application that I think you were emailed yesterday. It's got data in it. Again, this is an updated application. We strongly encourage you to, use this application. If you're ready to submit your application like tomorrow, we will accept the old application, but we will be using the 2022 rent limits when we do the underwriting. And there are some enhancements in here within the 427 version, as well as there's a clause, a rent clause within the application that if your 100% four-person AMI is equal or less than the statewide non-metro median income, you can designate within the PRP program the previous low-income units at a higher AMI level. You can go up to 80%, and so 4 counties were not part of that prior application under the 2021 income limits, and they are part of the newer application. Those counties are Mendocino, Mono, Shasta, and Siskiyou. So, but there are some enhancements. There's some additional cell comments and instructions within this version, and using this will give you a better feel for what your COSR is going to be, because the prior version has a little lower rents. Rents went up for 2022 in every county, and quite significantly. I would say 8 to 10% higher in 2022. So there is going to be a material difference in your COSR calculation, most likely. Again, we're going to go over each worksheet. Try to go slow. If you have a question, you can use the raise your hand feature, and we'll pause and I'll try to answer your question, or you can send in a text through the chat. We can answer it as we go through the worksheets here. So the application that we've done for PRP has a lot of similarities to what we do in all our other programs, our rental housing programs. This is one of the first times that AMC, our monitoring section or branch, has kind of managed a program, a new funding program. But the application that we're looking at today is very similar to what we do in all our other rental programs here at HCD. It's also very similar to what maybe you're used to in working with, say, your project operating budget that you have to submit every year, and your scheduled rental income that you have to submit every year. So there's a lot of similarities both to, you know, the compliance forms that you might be familiar with, but it's also very similar to what we do in other programs. So the first worksheet is the project applicant and threshold worksheet. And so there's instructions at the top, and I'll go over those. It says, provide answers to application questions and requirements within all yellow shaded cells, beginning with this worksheet. And after completing this worksheet, proceed to the worksheets from left to right and fill in those yellow shaded cells. So in other words, the information kind of flows from left to right. And if you start in the middle, you might not see the full picture of your application. So it's best to start with project applicant threshold and then just work to your right. Now, like I said, there's some similarities to the scheduled rental income. We have the assisted units worksheet, which is going to capture your original regulatory agreement unit mix. And so there's a, an efficiency of maybe copying and pasting from the data from your prior approved scheduled rental income and pasting it into the assisted unit worksheet. We got to be real careful about that because copying and pasting can corrupt this application. And so we strongly encourage you to not do that. If you're good at Excel and you want to copy and paste from your scheduled rental income, paste values. Don't just copy and paste. There's a paste option where you can paste the values in, and that won't mess with the formatting and the formulas and bring over links from an external file. There are cell comments throughout the application. Red triangles like this one here in row 4 indicate there's a cell comment to help you understand what we're asking for, the data we're asking for, or to clarify what we're asking for. There's red shaded cells that will indicate a possible error in your application, and if you can look at the cell comments to try to correct those red shaded cells. If you still have questions, you can contact the PRP staff at portfolio reinvestment at hcd.ca.gov to discuss a red shaded issue and help you overcome that. Orange shaded cells throughout the document indicate attachments that must be submitted with your application. Carter went over that in the portal, and so as we scroll down, you'll see the orange shaded cells like 35, 45 through 53. There's file names. Like in 35, you see construction letter, that's the file name. That file name will match up to the portal, and it will be identified in the portal by the file name. A little bit of description of what we're looking for in the attachment, and then when as you upload them, you'll come back through and indicate that you've uploaded to the HCD portal. Now the portal is arranged, the documents in the portal are arranged in order that we see them here. So the first the first file or attachment in the portal should be the construction letter number 1. And then if you have multiple funding sources, it would be number 2, and so forth. And it just kind of goes in order in the portal, consistent with the application. So going back to the instructions, if you have issues, comments, or questions regarding the PRP application, please note them on the last worksheet, which is over here. It's the customer service worksheet, and email your complete application to appsupport@hcd.ca.gov. So just enter your name and your phone number. Send appsupport@hcd.ca.gov an email. You could indicate the tab that you're having a problem with. Section's not that important, but do indicate the cell reference or row, and then just kind of a brief comment. It doesn't have to be in perfect sentence order. And that will help us troubleshoot your application using the data that you've filled out. It's difficult to resolve something if we don't see the data that's involved in your application. So that's how you would ask questions from and get answers for the application. So the rows 3 through 17 on this worksheet is a project summary. It summarizes whether, what kind of set aside you have. Is your project eligible for the 80% AMI? And so I just want to share that again. There's a cell comment here, which you can't probably see very well. It says in counties where 100% of AMI under the current multifamily tax subsidy project income limits is equal to the current statewide non-metro median income, sponsors may designate up to 20% of the assisted units that were designated in the original HCD loan regulatory agreement as low income at 80% of AMI. Okay, so in this case, this mock-up project is located in Alpine, and it says no, it's not eligible for that. And so let me just show you. Let's see. Okay. Oops. So this is a document from HUD on where we find these non-metro median incomes. It's a PDR notice. It's 2022-001, published by HUD, and this publishes the state median incomes. So the non-metro median income for California is $80,300. If we look at the various counties, and we look at 100% for Alpine, we see it exceeds the 80,300. In this case, it's 90,800 for 4 persons. If we go down to some of the other counties like Butte, we see it's 77,900, which is less than the 80,300. So if we were to select Butte down here in our mock-up, that would change to yes. And then in your assisted unit worksheet, this would turn blue, indicating that you are eligible to size your the restricted units or the assisted unit up to 80% for a previous low income unit. Okay. So it will turn blue if it's yes. If we go back to Alpine, it will say no up here. Okay. So the other parts of the summary is it indicates whether or not you're eligible for a set-aside. Set-asides, there's quite a bit of money out there for set-asides funding for for special set-aside project types. There's a small project set aside. I think there's about $100 million for that. And then there's a residential hotel set aside. So it says what you're eligible for, and then it says, it tells us and tells you what are you applying for the set aside. Okay. And then it gives you it provides a summary of the proposed funding amount. PRP loan summary, the COSR summary, and the total. Row 18 here is where we ask you to estimate, and you probably want to do this right when you begin filling out your application. This particular row 18, enter the date your PRP application is submitted to HCD. That has an impact on your property condition assessment, which needs to be dated within 1 year of the date you submit your application. It also ties into the household income certification date. We require household income certification within 1 year of the date your application is submitted. And so if you put a date here, and you put in the other dates that I talked about, the PCA date, certification dates, the cells will turn red if it's over 1 year from the date that you anticipate submitting your application. Now you might come in and you might need to update this as you go through the application, but put a preliminary date in there in row 18. Next, we've talked about, now we're going to talk about the project. So this is project, applicant, and threshold worksheet. So this is information about your project. First question, have all HCD project regulatory agreements expired, or will they expire on or before 12/31/26? Now, if you were to say no here, you'd see a red shaded cell, which indicates you may not meet the threshold requirements for this program. So if you do, and you have a question about that, if it does turn red, you could contact the PRP staff. On row 21, you'd enter the original regulatory agreement contract number, not the project number, but the contract number, and then the expiration date of the regulatory agreement. Now, if you have a question about when does, I can't figure it out, I'm not sure when my regulatory agreement expires, again, contact the PRP staff. Your project name, now in row 22, and then in row 23, was your project formerly known under another name? And so, project names change, so give us an update or information about prior project names. Project address, county is really important. County will, like I said, it will determine your eligibility for the 80% AMI. It's critical for establishing rent and loan or income and rent limits for your project. And so all the yellow shaded cells, you really want to make sure that you address them, okay, as applicable. If project has multiple sites, give us the other addresses for those other sites. And then we go into some other, information about your project. The blue shaded areas or blue text are hyperlinks to other worksheets. And so they're here in row 30, 31, they're in the attachments. So you can jump to those to get more information about areas in the application. So I want to talk about row 35 or 34. Applicant has project construction period rehab financing provided by another lender as evidenced by a letter of interest or commitment letter. So this is a requirement. If you say no, it's going to shout at you and turn red. But what is what is a financing letter of interest or a commitment letter? I'm going to ask somebody from the program staff to maybe share a little bit more, give some insight on what we're looking for there.
Brian, would you take this question, please?
Sure. Basically, we're looking for a substantive commitment letter from a bank. So basically, it can't just be like a one-page letter. They need to identify the project address, the types of units, the rehab involved, that type of thing. Something more substantive just than, hey, yeah, we kind of have an interest in lending money to your project. We want to know that they've actually reviewed something pertaining to the project, and I can attest to that in a letter form.
Okay. Any questions on that? One thing I didn't mention, we throughout the application, we reference NOFA sections. So as you fill out your application, you really want to have your NOFA open, so you can make sure you're complying with the NOFA requirements. This one is the little symbol there is the section. So sometimes I'll put NOFA in front of it, but generally I won't. We also refer to the UMRs, the Uniform Multifamily Regulations, within the application. UMR references will be preceded, and sections will be preceded by the acronym UMR. We also refer to the multifamily housing program regulations within the application, and those are noted with the acronym MHP in front of them. And so, quite frankly, I would have the Uniform Multifamily Regulations, available and at your side as you fill out the application, the MHP regulations as well as the NOFA for reference. So then we're going to go into the applicant. We're going to talk about the applicant. Applicant one information. We're looking for authorized representative, contact person. We want to make sure you put in the phone numbers and fill all this information out. I didn't fill it all out for the mock-up. The organizational type, we've got a drop-down list of the eligible organization types for applicant sponsors, and then the attachments that are that go along with the applicant. We've got the resolution. Again, take a look at the sample resolutions on our website. That's sometimes a time-consuming process, so you want to be aware of what the requirements are for resolutions. If you don't have an applicant two or co-applicant, you don't need to fill this out. You don't need to put NAs in there. Just move forward. If you do, complete this just as you did the applicant one. And then we've got some, applicant requirement information and particulars. If the applicant is a joint venture, there are certain program requirements for joint ventures, as well as if the applicant is a tribal entity. Also, if the applicant is an entity relying on the capacity of a parent organization, specific employer, or other entity having control of the application. If yes, identify the parent organization, specific employer, or other entity having control. So there are some maybe some areas, some applicants that will come in that are relying on other people's experience. And so fill those in if that applies to your project. Next area is, before I move on, a site control. Now, site control, here's a reference to the UMR 8303. We need site control for you to move forward with your project, obviously, as the applicant. Okay. Next area is threshold. These are critical program requirements. If you don't meet these, then you won't pass threshold and you won't be eligible. I'll highlight a couple of them. Road 94 here, applicant has a third-party property condition assessment, which is a PCA, prepared within 12 months of the application submittal date. So we see this was prepared over a year from the date that the applicant estimates they will be submitting the application. So if I change that to 12/1/21, the red shading will be off, and it will now be dated within 1 year of the application submittal date. For the PCA, here's an explanation of the PCA. It is prepared within 12 months of the application submittal date, and it documents all physical needs and all repairs required within 5 years of the PCA date. HCD will assume a $500 per unit annual deposit for the replacement reserve unless a different amount is approved by HCD pursuant to 8309B2. PCA must include the total residential and commercial square feet, number of elevators, and number of parking spaces. Okay, and then you have the next document, which is a scope of work. This is very important. You're gonna elaborate on the project, the work, the rehab work. Attach a scope of work for the project that includes the repairs required in the next 5 years as identified in the PCA, and include a general timeline for the repairs. Okay. Now, there is one other area that I forgot that we need in the scope of work, and that is let's see. Well, I'll get to it, I guess, as I go through. But okay, let me go down to the next row. Applicant demonstrates fiscal integrity for MHP guidelines 7301 by the 10th year after the date of recordation of the PRP rehabilitation loan. So what we're looking at here during underwriting is we're looking at in the cash flow worksheet, which I'll show you later. Do you have, does your cash flow break even for any year between 1 through 10? And yeah, we want to. The coaster is going to help, but we want to make sure that we have fiscal integrity of the project. Generally, we're not going to see, an up and down. We're going to see kind of a consistent pattern, and hopefully by year 10, things turn around and break even with all the rent increases. Now, we have to make certain assumptions in the application and in underwriting. We don't know how things will play out as far as vacancies, as far as household incomes, and the amount potential that's allowable for rent increases. And so, there are some assumptions that we're working with within the application. And, if for any reason you feel, let's say you're not showing fiscal integrity, but maybe, you have different assumptions based on, how you see your project operations playing out over the 10 years. Have that discussion with PRP staff, because we cannot take every possible scenario into account in the application. But we do want to see, we'd like to see, and it's part of the requirements that we have fiscal integrity by the 10th year. So that's it for this worksheet. We'll go to the next one now, which is the owner, borrower, and development team contacts. So the development team contacts are on the bottom. If you have formed your development team, please give us this information. It greatly streamlines us contacting your team if necessary, you and your team, and just very helpful. So the top part is your owner borrower. Could most likely, it could be a limited partnership, however it's structured. You would put in the legal name and then the organization type. In this case, it was a limited partnership. And when you select limited partnership, the controlling party is related to the limited partnership. If the owner borrower was a corporation, then the drop down here would be related to a corporation, the controlling party drop down list. So again, there's attachments that are required. If you have a limited partnership and one of the partners is the same as the applicant on the prior page, you know, obviously you don't need to submit the same documents for the same entity twice. Okay, so you can just ignore the you know, the updates, or just put yes. Yes for uploaded to HCD, and you're good to go. We have potentially 3 controlling parties for the borrower owner entity. If you have more than one, please complete all areas and submit all documents for all controlling parties of the owner borrower entity. Now we're going to move over to the assisted unit worksheet. Again, let me just back up. Sorry, I'm gonna back up to the threshold area here. We have a requirement. And that is, where is it? It's about making sure that you're not in row 87 here. Applicant and borrower certify that they are not in breach or default of the original HCD loan, nor under any other HCD programs except for the maturity of an unpaid loan. So what we're asking for here, and the requirement is, have you submitted all your schedules of rental, your recent schedule of rental income? Okay. And so here's the schedule of rental income that HCD requires. Generally, there's unique ones for RHCPO projects, but you know, it gives us information about the occupancy of your, you know, of your project, the assisted units, the non-assisted units. And this is what we've kind of used to do the PRP application. But you need to be current and have submitted within 12 months this schedule of rental income. Okay. The other document that you want to be current on, another document, is your operating budget. Unless you have a waiver from HCD, annually you need to submit your operating budget for your project. Okay. HCD approves this. The final document that HCD requires is your financial statements. Now, your financial statements must be submitted to HCD. If you're required to submit audited financial statements, it must be in compliance with the audited financial statements handbook for HCD. Now, you know, sometimes we're getting audited financial statements that do not have expenses classified within our required expense classifications. These classifications are standard at HCD. They're standard at Calhfa. They're also standard at PCAC and as well as HUD. And so, you know, we want to make sure that you've submitted your required financial statements each year. We also want them in the format that we've designated here in the audit handbook. So I'll move over to the assisted unit worksheet. And again, this worksheet, you would capture and enter all manager units and PRP assisted units. In other words, the units that were designated assisted units in your original HCD regulatory agreement. Okay. Now you also may, you can take units that were designated as non-assisted, and you can make them assisted in the PRP program. You would get an assisted per unit loan amount for rehab for those units. And but if you do, you'd want to indicate that they're new PRP units in columns J and K. For non-assisted units, market rate and other restricted units, you would enter them on the non-assisted units worksheet. So
I'm wondering if this might not be a good time to take a couple of questions related to this tab from the chat.
Sure.
Is that all right with you? Okay. So one of the questions states, we have other regulatory agreements on the project that are more restrictive than HCDs. How do we reflect those rents on the form?
So we are only interested in monitoring the program based on our restrictions. Okay, if you have, in other words, we're gonna show the HCD approved rent in column I here. Your current rent might be a lot less because it's more restricted by another program, and so it would show as less as the current rent. But we're capturing on this form our restricted levels and trying to determine, are you in compliance with our rules? So you would just show a lower rent than the maximum rents that we indicate on this form. And so it all starts with the current rent. Now we're going to size this based on our rents. I think that's a good question on, okay, HCD allows certain rent increases, but, you know, based on, you know, City of Fresno, we can't raise our rents 10%. I think that's a good question. We'll have to, you know, we'll have to find out what the specifics are, and we'll have to work with you on your application. And what we're going to probably need is a copy of those restrictions so that we can customize your application so we have an accurate cash flow forecast. It's not going to be easy. We can't foresee all these other issues out there. Does anybody else have any questions? This is how I see it. I'm not going to be doing the underwriting of your project, but I'm trying to answer your question. Does anybody in the program have any thoughts on that? If you do, you're muted. I tell you what, you know, if you have that scenario, I would send an email to the PRP staff and explain your situation. Generally, HCD doesn't underwrite based on, you know, other lenders' requirements. We underwrite based on our requirements. Okay. Any next question? Or
George, it looks like there's another question in the chat. Our project has an operating subsidy that will start after the PRP COSR is exhausted. Is there a way to model that in the cash flow sheet? Otherwise, the cash flow is showing we have negative cash flow when we actually will have a subsidy available starting in year 6.
okay. I tell you what, why don't we hold that thought when we go to the cash flow tab, maybe we can talk about it. Okay. So let me just go through the assisted unit tab, column by column. Column A here is the unit number. So we want you to enter all units, use only one line for each unit, even if rent or other amounts are going to change during the year. And in this column A, there's a drop down here. And so you can, after you enter all your units, you can deselect the blanks and it will hide all the blank rows after you've entered all your assisted units. If you have a manager's unit, enter it, you're going to enter it on this form and then enter an X in column B. Household ID, enter the special ID tenant code that your property management software assigned to the household. If none, assign a tenant code to each household, but do not use the tenant's name or the social security number. Okay, column C, number of persons in the household. If the unit is vacant, select vacant from the drop down. Okay, and then bedroom size. If you have a group home occupancy as noted in Exhibit B of your regulatory agreement, that would be just indicated using a 0 here, a 0 bedroom. Again, what you're going to enter on the sheet is your assisted units, probably what you've been reporting on your SRI in the past, but it also must comply with Exhibit B of your original regulatory agreement. And so you might have your regulatory agreement out as well, because as you fill this out, you want to make sure you capture the number of bedrooms and the income restrictions, and as noted in the regulatory agreement Exhibit B. Next column is your income certification date. Again, it must be within 1 year of the application submittal date, so that estimated submittal date is really important. So you don't see red shaded cells like this, which is over 1 year. So if we change that to 21, try 22. Time flies. Okay, then it turns off. Okay, for a manager's unit, there's no rent, so you don't need to income certify the manager's unit. Existing household income is your certified household income as verified by the recent recertification. I'll leave blank if the unit is vacant. The current rent, okay? So what is the current rent? And then in column I, enter the HCD approved rent from the last year's SRI, or scheduled rental income, for this unit. So in this case, the current rent exceeded what the approved rent is. Now, potentially, maybe you discuss that with HCD. Maybe you got HCD was okay with that, and so the red shading, you can bring that up to PRP staff, or we may ask you about it. But in some cases, current rent may have been approved to be higher than what we approved 10 months ago. But generally, we're going to have to lower that down. Okay, so it doesn't exceed the approved rent. The original HCD regulatory unit designation. In other words, what program funded, provided funding for your previous project, which program's regulatory agreement is expiring, which program regulatory agreement is represented by this contract number. And so generally you'll have this column all the same. Unless you have a manager's unit, which for a manager's unit, select manager. And if it was a non-assisted unit previously, you would indicate in both these columns new PRP. Okay. So there's a drop-down list here. There's a cell comment that gives you, it's kind of describes the acronyms and the programs. And then it asks for the original HC regulatory agreement income level. So it's either LI, low income, or VLI. LI includes 50 to 80% AMI units and high home units. VLI is 50% AMI or less, or low home units. Again, it's for units that were non-assisted in the original RA that will be PRP assisted, select new PRP. Okay, then we go on to, okay, what is the new AMI level going to be for these units? And units designated in the original HCD loan regulatory agreement as LI can be set at 60% AMI or less. And then it's got this exception in counties where the 2022 100% AMI for 4 persons is less than or equal to the 2022 statewide non-metro. You can set the AMI up to 80% for loans. Unit designated in the original HCD loan regulatory agreement as VLI can be set at 30% or less, 30% AMI. New PRP units may be set at any AMI level up to a maximum of 60%. Okay, so that's described, these new PRP or the levels are described in the NOFA in section E1, A, B, C, and D subsection. I don't have this subsection noted in the newer version of the application, I don't think. I just added them here so that you might be able to know where that is, where the AMI, new AMI levels are in the NOFA. So then we go into the rents. A, B, C, and D are the potential rent maximums. And then S looks at A, B, C, and D and takes the lower of A, B, C, and D. The green in A, B, C, or D says, okay, in column S, which maximum are we using here in column S? Okay. Column M looks at the county income, 35% AMI income limits based on the number of people in the household, and documents what the 35% level is for the number of people. If the existing household income exceeds this number, then you have a 10%, potential 10% rent increase. So like in this case, in the first case, if it doesn't, it's a 5%. So in column G here for row 3, household income's 25,000, 35% AMI is 28.6, and so it's less than, so the potential rent increase is 5% at that point. Row 4 is got a 29,000 annual income with a 28,630, 35% AMI. So the 29 exceeds it, and it's a 10% increase. So that's what this is showing. It's comparing the household income to the 35% level, and that's talked about in NOFA section E3, A, and B. And then what this does, A, is it multiplies the current rent in column H by the percentage increase to determine the year 1 maximum level for this unit. Column B looks at the AMI rents. Okay, as you've indicated here, this is going to be the new PRP AMI. So it pulls the AMI at the 60% level. The next column looks at, and that's discussed in E2. The next section is E3D in the NOFA, and that says rents cannot exceed 50% of household income. So this calculates the rent at 30% of the monthly household income, or 50%. Well, it's 50% of household income times 0.3, which is your rent calculation. And so that's indicated as your 50% household income rent limit. And then you have your current monthly rents. Now, rents, so in this first row here, we've got 50% household income rents at 1,042, but the current rents are 1,100. So we're not going to ask you to reduce rents. So that's why, even though there's a limit here, the rent for this unit is based on the current rents, because we're not going to ask you to reduce rents. Okay? The current rents is lower than the other two, but it exceeds the 50%. Okay. So while we're here, we'll just go through some other scenarios. Okay. So let's look at row 4. We got a VLI. Now, remember the rules were that VLI have to be 30% or less. The applicant indicated that their proposed PRP AMI level was going to be 35. So it says, no, can't do that. So you got to drop that down to 30%. So you don't want to submit your application with a bunch of red cells highlighted here in the assisted unit, because it's going to give you a faulty cash flow, faulty coaster, and there's going to be a lot of issues with it. We're going to have to send it back. You may have to start at the the end of the line again with your application if there's significant errors in it. So we corrected that. So let's say down here, let's say in this one's fine. We've got a $600 current rent. We approved 600, no problem. They're at 30% AMI. The household income exceeded the 35%, so they're eligible for a 10% increase. So now the limit using the 10% increase is 660. That's lower than the AMI rent. It's lower than the 50% of household income. It's higher than the current rent, which is okay. And so the new rent limit for that unit and what we'll use for forecasting cash flow for the first year will be $660 per month. On the next unit, let's say this is 700, and that exceeds the approved. We're just going to say we made a mistake. It's 700. So now we have a household income of 30,000. We have a 35% AMI of 34, so it's less than the 35%, so it's a 5% increase, which gives us a limit column A of 735. Okay, but the AMI, the new AMI is 708, and so now the rent limit would be 708 that we would use for cash flow for your project. And it's indicated here in green. So now let's jump down to row 9, and we've got a vacant unit. We don't need to put household income. And we said, okay, vacant unit, I'm gonna put 80% in. Well, unless your county, as we described, the 4-person median income is 100%, is less than or equal to the state non-metro median income, you can only go up to 60%. So if you go 60%, you're fine. If we go 80%, we say, I don't know why I put Alpine. It's actually Butte. Then it's going to turn blue, and your 80% is going to be fine. Now, if it's Butte, if your county isn't Butte, you can have no more than 20% of your units at AMI, your low-income units. So row 279 here in column L will calculate the percentage of your units that are at 80%. It cannot exceed 20%. If it does, it's going to highlight in red. That's going to be another error, and we're going to have to, kick it back to you and ask you to correct that. So let's go back and we'll change this to Alpine and reduce that down to 60%. And then we come down here and we have another error. This is a VLI unit. And again, VLI must be 30% or less. And so we'll reduce that down. The new PRP unit, we will use the AMI rents, okay, for the PRP here in row 13, okay? So again, after you've entered all your units, you can deselect the blanks, column A, to hide it. If you want to print it out, that's fine. Row 280, as we move over here, will give you your annual rents, which will flow forward to the operating worksheet under assisted unit rents, and that will auto-populate the rents based on this worksheet. Now we ask you to put in the utility allowance for your projects. We're capturing net rents, okay? So the net rents is what's going to flow forward. Now, we want the utility allowance backed up by you submitting the local housing authority document showing the current utility allowance chart. So that's why it's highlighted orange here. You might miss this, but it's going to be in the portal. We're going to ask for that housing authority document showing what the utility allowances are. Okay. Column W and X are for if the unit has a tenant subsidy. We've got a drop down here for different types of tenant subsidies. In this particular mock-up project, there was no rent subsidy. And so just, so we know that you answered or you've addressed this and you haven't skipped the rent subsidies, just select no rent subsidy for both of these. If you have a rent subsidy, make that selection. If it's not in the list, you can select other. This just is a kind of a information only field. It shows rents, approved rent as a percentage of household income. Okay. So that's pretty much it on the assisted unit worksheet. Again, try to use the cell comments to help you in filling this out. If you have issues or questions, you can send your application again to app support. This is the meat and potatoes of your application, the assisted units worksheet. For non-assisted, kind of like the SRI, you're going to put all your non-assisted units on this worksheet. Not your manager unit. Manager unit goes on the other one. And you're going to average what the rents are for the non-assisted units. Okay. What is your average monthly rent for non-assisted units? You're going to give us the number of units, what that average is. We're going to come up with the annual. We're going to total it all together, and that's going to flow to your operating worksheet for under non-assisted unit revenue. If you have tenant subsidies on the non-assisted unit, enter the total amounts here, not the average, the total. Okay, the total rent, total annual subsidy revenue by bedroom for the non-assisted units. Then we have a pivot table like we do in the SRI, scheduled rental income, that captures this worksheet. This first worksheet is a pivot table capturing the original assisted unit. So after you filled out the assisted units worksheet, you move forward, you're going to right click here and select refresh. And it's going to give you a summary of everything you have in your assisted unit worksheet. This summary should match Exhibit B of your regulatory agreement. It's a cross-check to make sure you've entered all the units, all the assisted units that are within the your regulatory agreement. This summarizes this next worksheet. Again, you're going to refresh it. Another pivot table to summarize what is the proposed you know, background of the new units. Okay. I'm not seeing the AMIs here. I don't know what happened to the AMIs, why that's not showing AMIs. I'll have to take a look at that. Generally, it was also at one point showing the AMI levels, that the proposed AMI levels. But we'll get to this, and what we're going to use this for is for the new regulatory agreement, the new PRP regulatory agreement. This is not really that important right now, but it will help us in developing our project staff report if we recommend your project for an award, and will help us to establish the unit mix chart for the new funding. Okay, the development budget is the next worksheet. In row 2, here in the yellow shaded cells, if you have other funding, indicate those in column 2. And then you're going to say, you know, what the HCD PRP rehab loan is going to pay for, and what the other funding source is going to pay for in here. And you're going to come up with the total residential costs over there in the column I there. These names and the total amounts down here on the bottom, total budget amounts, total project costs, flow forward to your dev sources worksheet. So your total budget will be your total funding from these sources. And so the name, it auto-populates here. You're going to need to fill out your construction sources. Your total construction sources must equal your total permanent sources. In this case, it doesn't. So it doesn't shade in red, but it should equal in your application. So on the development budget, we've got this column here, or this cell here under HCD PRP rehab loan. Is for the HCD PRP administration. That is our way. That's the PRP developer fee. We call it an administrative allowance. That's calculated over here on this worksheet. There's only one cell you need to complete here. And the question is there another funding source that is funding a developer fee? Well, in this case, we're saying yes. American Savings is going to allow a developer fee. And so, you know, it says complete section 3. Well, section 3 is automated for you. It takes it looks at the number of units in the project. It looks at the rehab work, the cost per unit. It's $268,000. If your rehab work cost per unit exceeds $41,000, then it's considered substantial rehab, and we'll calculate using this section. If your rehab work cost per unit is between $11,500 and $41,000, then we will use this section, section B, to calculate the total developer fee. And so in this case, we use section A. It was $600,000. So the HCD allowed is $134,978, and then the non-HCD would be the difference for that, the difference between the 600 and the 134. So you take the 134 and you'd make sure you enter that in your development budget under HCD PRP allowance, and the other funding of the developer fee would be paid by American Savings. And then you come up to your $600,000 total allowable developer fee. Now, If you don't have another funding source that allows a developer fee, then the only real allowance you have is the ACD PRP calculation, which is in section 2 here. So you want to make sure after you complete this worksheet, you come back here and enter the amount, the allowable amounts within your development budget. So again, the information flows forward to the dev sources worksheet, and then we come to the maximum rehab loan. Rows 2 and 3 summarize the total rehab loan amount, which includes your base amount, which is kind of your per unit amounts, plus your boost amounts, okay? So row 5 is your the boost amounts. If you select, so in this case, I mean, this is your base amount. So the base amount is $200,000 of rehab money per assisted unit. In this case, we got 11 assisted units, so we have a $2.2 million maximum base amount. The NOFA maximum is $20 million for rehab. That includes the base amount, which is your kind of your per unit amount plus the boost. Both of those combined cannot exceed $20 million. Now it asks, is project a residential hotel? It's trying to determine, okay, here we're trying to determine, are you going to be applying for a set aside? Are you eligible for a set aside? So definition of residential hotel is an MHP regulations 7301. I have added in this new version a cell comment to help you understand what is a residential hotel. Well, it's you know, any building that contains 6 or more residential hotel units, where a majority of the units are residential hotel units, and a residential hotel units are single room occupancy units or an SRO. So there's a lot of money for residential hotel set aside. So if your project qualifies for that, I strongly encourage you to apply for the residential hotel set aside. You still get the $20 million maximum for rehab. Then we have the small unit set aside. Small unit set aside is for projects that are
for
help
an
me out.
asset manager job,
Uh-huh.
and it didn't happen.
Uh-huh.
But I was
On
on
Florida
my day
Road.
off. I was on my day off,
Whoops.
and I told her it's not gonna happen because the funding didn't come in.
Uh-huh.
Well, the funding came in,
Somebody needs to.
Mm-hmm.
and they want to extend
Did you
it.
mute? Did you mute your phone, please?
Ooh.
But I have to get on the phone with her again.
Would somebody, would you please mute your mics, please? Thank you. Okay. So the small set aside is projects. Help me out, program. What is a small project? Somebody from program? I forgot.
I'm sorry, George. It's 5 to 20 units.
5 to 20 units. Okay. So this project, it's a small project set aside, but because it's 20 units, and it's permitted, but it's permitted to apply outside of the set aside. So remember, there's it qualifies for the set aside, but it's saying, yeah, I need a little bit more than the $2.5 million maximum. So in other words, if we say, yeah, we're going to apply for that small project set aside, again, there's $100 million in there. So I strongly encourage you to apply for it if you don't need more than 2.5 million. But if you select that, it shows what your loan limit is now at 2.5 million. But you're no longer eligible for the boost money down here. Okay. So in this case, it indicates that you need 2.7 million. So the small project set aside doesn't really work for you because you're going to be limited to 2.2 million, which is the 11 units times the 200,000. You don't receive the boost amount. So in this case, we selected none, and now we're eligible for the boost, as indicated in row 12 here. Okay, so the boost looks at high cost items within your development budget and gives you a higher rehab loan amount for those type of costs. And they're all listed in order as they are in the application. But it only allows for the two highest cost factors. So you only get two boosts, and it's the higher of the two. Okay. So in this case, there's some relocation. It's automatically calculated. It's at 47.5, the boost amount. And then they had we had some high structural costs that give a boost of 550,000. So that qualifies as your largest boost factor. And then it has accessibility modifications. And the boost amount eligible is 375,000. So that's your second highest. So adding the two boosts together adds up to 925,000. So the project would be eligible for a high cost boost of 925,000. Now, these costs must be evaluated by HCD. So you have to submit these documents related to these high costs to get those boosts. If you don't submit the documents, we cannot allow those boosts. So these are required documents that support these high costs that you've indicated. Okay. We've talked about the PRP administrative allowance, and now we go to the supportive services cost, and now we're talking about operating expenses and cash flow and COSR. That's what the purple shaded cells are. If you're going to provide supportive services, you need to fill this out. If you're going to have supportive services expenses in your operating budget paid by the project from operations. In this case, the project is going to provide some supportive services and going to charge the project supportive services expenses. So we've indicated 20 units, which are the total number of units in the project. They're all going to receive services. Maybe it would be 19 because the manager might not receive the services. In this case, we just, the mock-up has 20 units. So it's calculated $283 per unit per year. This comes from UMR section 8301. It's adjusted every year, it increases every year. So we have the 2022 per unit per year amounts here. Calculates at 5,660 allowable operating or supportive services costs for this project. Then we go to the operating worksheet, and if we flow down here, oops, they put 6,000. Okay, the supportive services costs was it had a lower amount. Now this flows from above, so you're not going to be able to change it here. It's entered up here, the amount. So we're going to put 5,000. Go back down here and well, I still see an error. That not sure. Okay, well I will see if that needs to be corrected in the application. Sorry about that. Anyways, we want to compare those expenses to the that was one of the enhancements I made, and we try to get everything done and try to get the application reposted, but compare compare your expenses here to your limit on this worksheet. Okay. If it's red and it's below, don't worry about it. Okay. Next worksheet is cash flow. And so we have assumptions in the cash flow. Year one in the cash flow is pulled from the operating worksheet. We have assisted unit rents inflation, 7.8%. How did we get that? Well, what we did is we pulled that from the assisted unit worksheet, and we captured the weighted average increase for all these units. Okay, and we came up with a 7.78% weighted average increase for the assisted units. And so that's the assumption that we're making for assisted units from year one moving forward. We have other assumptions. We have non-assisted rents going up at 2.5%, and they're indicated here. We have laundry and other income going up at 2.5%. We have vacancy assumptions at 5%, 50% for commercial. We have operating expenses increasing at 3.5%, property taxes at 2%. And so those, if you have different assumptions, and this is where I was going with the scope of work, if you have different assumptions that you feel should be part of your project, describe those in your scope of work document, okay? We're going to see it. We're going to read your scope of work. Describe your rationale for using different assumptions in your scope of work document. Remember, we asked for that here, right under the PCA. And generally, we'll talk about the scope of the development work. But it's a good place. I think we can put that, any assumptions for your project. You could also include that in a within your scope of work to describe your rationale for using different assumptions than what we have in the application. So this is going to show your project cash flow. We see in year 9 here. We see that year 9 breaks even or has positive cash flow, so that's good for the fiscal integrity test. And so we had a question about cash flow. Maybe we could come back to that now. Stephanie? I think you're muted.
Oh, I'm sorry, George, I was. Thank you. I was trying to answer. Sorry about that. I'm sorry. So Carter has been answering the questions in chat.
Okay.
So I personally feel, but please, you know, pipe in anyone on this call, please. If there are any additional questions or if the questions you asked weren't, you know, answered the way you're, you know, you feel like understood, please let us know. But at this point, I mean, I think the questions have been answered, George. So,
all right. Was that more or less project specific, or did you want to bring that to the forefront, Carter?
So, George, just to be clear, I've been trying to answer most of the questions, but I think I probably missed some.
No, Carter, you've been doing great. I mean, you've been doing great.
Yeah, let's just flip through this really quickly though to make sure we've at least been responsive, whether it's hey, we'll get back to you after this call, or you know, bite it off now. So let's see here. So let's see here. So yeah, we have the most restrictive, which we're going to tackle after.
I'm not sure, Carter, if Diana's question, if Diana's still on the call about the operating subsidy that will start after the COSR is exhausted, was that answered? I did not catch that answer. So I don't know.
I did not answer that one. That's the one I was thinking of. I kind of missed it. So yeah, and just for the group here, the question is, our project has an operating subsidy that will start after the PRP COSR is exhausted. Is there a way to model that in the cash flow sheet? Otherwise, the cash flow is showing we have negative cash flow, and we will have a subsidy available starting in year 6.
Okay. So let me try to answer that. And let me just go through the cash flow and I'll try to answer that, or the COSR worksheet, and we'll try to answer that at the same time. So this is the COSR worksheet and the calculation. It's consistent with section F of the NOFA. Row 2 says, what's the approximate date construction loans will close? So in this updated application, we took your construction start date. We didn't ask you to enter that date because the construction start date and construction loan close is approximately very, very, very close. Okay, so we're going to use that date. Now, from the date your construction loan closes to December 31st, 2026, is the cash flow period that we're going to be looking at. So in this case, it's 12/22/22, and that is, there's 42 months from 12/22/22 to June 30th, 2026, 42 months. So that's roughly 4 years. So we're going to look 4 years cash flow for your project. And so that's 48 months. 4 times 12 is 48. So we're going to take 88% of that cash flow, the results, because it's 42 divided by 48. We're going to use 88% of that 4-year analysis for your COSR calculation. Okay. So the next row is your eligible cash flow. It's the negative cash flow amount for the eligible years. Okay, so this shows 173, 175. So if we go 4 years, you see down here the sum is 173, 175. Okay, so that's the negative cash flow. You only look at negative cash flow in this analysis. We take that, we multiply it by the 88%, we come up with 152, 490. Now, your COSR cannot exceed 25% of the rehab loan amount. We've got a rehab loan amount of 2.699568. We multiply that by 25%. We see the 152 is not in excess of the 25%. So this is the maximum COSR amount, 152. Now the applicant is only requesting 130,000. So we're going to take 130,000, and that's the COSR amount. Generally, most people probably will request, the 152. If they request 200. Then it's going to say the maximum COSR amount, is still the 152. This down here is just kind of a memo field. So if we make the award, the maximum distribution per year would be 38,000, which would be this divided by 4, your COSR years. So in answer to your question, if you have an operating subsidy that's not the COSR, you could enter it in the operating worksheet. You can leave this 55%, which it prorates your rent revenues. Prorates by looking at the consistent units divided by the total units. This is your proration for prorating revenue and expenses. You can enter your operating revenue or operating subsidy revenues for that other source here. I believe you should be able to enter numbers in here, amounts in here. So if your COSR is expired, you could enter your operating subsidies in year 4 and 5 to cover that. We're only looking for the COSR and for this sheet, just years 1 through 5. On the cash flow worksheet, if you enter an operating subsidy in here is going to play out. It's going to show up on this worksheet. We're not going to calculate your COSR off of this, off your operating subsidy, but there is a place to show a OR2, so to speak, by entering it, entering the amount here for that OR2. Does that answer your question? Hopefully. If not, you could email, us more specifically about your concern, and as you get deeper into this and you see what the cash flow is going to look like after all the information's in there, I would send your application. You can send it to the PRP support, but send your application in with it, and we can talk about it. Okay, so
George, this is Stephanie. Do you want application questions sent to the app support email, the app support at hcd.ca.gov, or the PRP email?
I would send it to app support. Something like this operating subsidy, I might be able to work with them. I'm going to CC program staff on these type of questions.
That's great. Okay, I just wanted to make sure that was clarified. Okay, that's great. I mean, you answered the question perfectly. That was for Diana, and I believe she dropped off the call. I want to remind everyone, we will have a list of these questions and answers, as well as from the PRP webinars on our website, hopefully by early next week.